Good day, everyone. It's Napoleon, your Forex teacher. Today, we're going to look at something very interesting. Never ignore this. Never ignore this. This is the most essential thing. You might have all the trading strategy, all the trading method, but you actually need this to be successful in the forex market. So let's look at what I'm talking about. Boom, we are talking about risk management. What is risk management? What is risk management? That's one thing you're supposed to ask yourself about. So if you've been told about risk management, if your mentor doesn't tell you about risk management, please leave that mentor because you're flipping going to lose all the money you have. So let me tell you something interesting. Risk management is how you manage your risk in the market so that you cannot lose your money or blow your account. The worst thing which can happen to a trader is blowing their account. When you blow your account, your career is over. When you blow your account, you lose interest, you lose focus. There is so much you're losing in the process. So it's better you actually use risk management. So first thing we're going to look at is lot size. So I think from watching my previous video, you understand, or reading forex books, you understand what is a lot size. So lot size is how much you want each and every pip in the market to cost you or to give you. Then leverage is leverage you are given by your broker. So since we are trading a very huge market, so it will require you to have at least 100,000 rand to trade the market. But because we are having brokers, they are giving us leverage. So leverage is like the money your broker borrows you, but you cannot actually take it. You can only take it when you make profit. So leverage is the amount you are given or borrowed by your broker to be successful to in placing your trades. Number of trades. So many traders will actually only allow you to place a maximum of 200 trades per time. So pending orders. Pending orders, it's when you actually place a trade in the market, but it can only be executed when the market kicks your trade. So until your market reach your trade or your pending order, you will not be in the trade. Stop loss is there to protect you to lose not all your money. Take profit. Take profit is also there to protect you. So many traders don't understand how take profit is important, because if the market, there are so many chances of the market turning against you, but if you have placed your take profit, then you know that you are actually protected. So let's actually, when you're having a small lot size, you are only risking a small amount. So let's say you want to make a 1 is to 1 is to 10. That means your risk risk uh, reward is 1 is to 10. So you are risking 1 in winning 10. So that means 1 if you place 1 trade in the market. So let's say I'm using a lot size of 0.01 and I'm having like $100 and I'm actually risking $10. So I'm having 100 and my account it's $100. So let's see, $100. Okay, $100. So my risk it's equals to $10 per trade. $10 per trade. But my take profit it's always it's at $100. So I will need to lose I'll need to lose 10 times. So 10 times to blow my account. So I will need to lose 10 times, but I will only need to win once to double. So I only need to win once to to double my account. So that's how interesting the forex market is. So when you understand these concepts, it's when you are going to start to be profitable. So let's look at pending orders. So pending orders, we actually have different kinds of pending orders. So pending orders, as I showed you, so let's go on to the chart. Let's not just talk, let me show you. So when I'm opening a pending order, so let me open a pending order, let me place a buy stop and a buy limit. So let me place a buy limit. So the buy limit must be below the market, but the buy stop must be above the market. So that's the difference. The buy stop will be on top, will be up here, meaning that when the market goes up and triggers my buy stop, then I will be in profit. But if it triggers my buy stop and it goes down, then I'll be in losses. But my buy limit, it's when I analyze the market and I realize that there is a potential of the market going down before it actually, if I realize that the market is currently retracing as it is, then I decide that I will place my buy stop here. Then when the market goes down and touch my buy limit and it continue on an upward trend, I'll be in profit. So that's the difference, that a buy stop must be up here and a buy limit must be down here. And that is the same case with a buy, with a sell stop and a sell limit. So I hope you now understand your pending orders. So pending orders, I like pending orders because I can say, okay, I see that this market has a potential of coming down here, but I am not interested on placing my trade. I'm only where the market is, but I'm interested in placing my trade here. So since I'm interested in placing my sell here, then I will actually consider a sell stop. Then one most interesting thing is that, let's look at here, placing a buy limit. You can also you put your price here where the market is 1 point something, 1 point, where you want to exit 175,963. Okay, then you say place. Let me remove this line. The green line is my buy limit. You see where my buy limit is? Let me place a pending order. Let me place my buy stop, because it's very interesting how these things, or all these tools we are having. Okay, buy stop. So let's see, let's place a price. We must place a price above the market because it's a buy stop. So that means I'm entering the market as it goes up. Do you see? So now that means I can just do this, I can also place my stop loss and take profit, and I can leave, go wherever I want to go. If I'm not sure with my analysis, I can use this. I consider it a strategy, and a very powerful strategy, because when you look here, you realize this is a resistance, and here you are having your support. So I've placed my buy limit just under the support. So do you see what's happening? So let's see what's happening. Let's see a few minutes. If nothing is happening, then I think it's a good buy, guys. If nothing is happening in these few minutes, then it's a good buy. I'll see you on the next coming episode. Great lesson for the day. So that's what happens, guys. That's the buy limit. It turns into a buy when the market, and you are only in profit if the market goes up, but if the market goes down, you're in losses. So guys, goodbye. Sure.